You can see like this company is already started like a mass production. There's like a facial recognition and facial like expression. Their motion control is really strong. Like if you kick it, if you like move it, it's very stable. It's like they're running marathon. And this is another interesting like company. You can actually using the app to do like autonomous, like just like fully autonomous like retail experience.
This should be a good conversation with Derek Yan. We're going to be talking about some really interesting thematic ideas, which are getting some really big traction in today's environment. For those advisors that happen to be in a physical office location, do me a favor, tell your other fellow advisors that this webinar is taking place. KraneShares is one of the great issuers out there, a number of unique and innovative funds, or as FINRA likes to say, distinctive, because unique can never be said from a compliance perspective for whatever reason, but distinctive is okay. So if you've got a distinctive lineup, and for those who are here for the CE credit, I will email you all after this webinar. Just stay to the end of the webinar. I'll get your information and submit it to the CFP board, and we'll go from there. So appreciate the support for those that keep attending these webinars. It's quite a bit of effort and work, and my clients, like KraneShares, obviously are very appreciative, as I am as well. So with all that said, my name is Michael Gayed. This webinar is sponsored by KraneShares. Let's get started with Mr. Derek Yan and talk about a whole bunch of interesting ideas. Go ahead, Derek.
Yeah, thank you, Michael. I mean, my name is Derek Yan, for people who don't know about us. KraneShares, we are an asset manager based in New York. A company founded in 2013, and we manage about 13 billion right now. So let me share my presentation today. Just for, I think people like been talking a lot about both AI and robotic investment. So at KraneShares, we have done a lot of research on this. Me personally, I've been working with KraneShares for like 10 years, covering global technology companies. So starting from, I think like previously, a lot of investment is really on the semiconductors, on the SaaS and cloud. And now, like all of a sudden, like everybody's talking about the AI robotics. There's a lot of nuances happening, and there's a lot of like debate, like whether it's too expensive right now, like is there more opportunity out there? What's the next big thing? So with that, we just want to have like a little conversation today, just like show you what's our research on this topic. Just before we dive into the presentation, probably I think like a lot of people may have experienced this before, like when we're like super young, like we have this like dial-up like connection experience, like when the internet speed was super low, right? If you want to download a picture, you gotta wait for like 5 minutes. Like as like a young boy, I was like, yeah, I'm like super impatient. Like I like definitely want to see like the full pictures, but it's loading the half. So I'm like screaming, like smashing the keyboard. But like just fast forward to today, like the internet speed is like crazy. Like we can do anything, like streaming, and we can like social media, like doing this webinar, but like the AI now just give everybody the capability to like, you can generate essay, you can generate like a weekend plan, recommend the restaurants. You can, now I'm like addicted to also like generating pictures like from AI. But it just like, I'm now still waiting for like a few minutes to get a picture generated. It's like so funny how my life experience is like loop. But like showing you the reality is like the internet speed is almost went up like 1,100 times over the last 20 years. And in the meanwhile, the cost of data dropped 100x. So that means like, if you look at like 2000s, you have probably experienced like the Yahoo time. The internet speed, and it's very expensive to go to the internet. And then the applications is only available in those format. Then fast forward to 2010, you're going to start to see a lot of like mobile use cases as like data become cheaper, the speed become like higher. Then you have YouTube, you have like a Facebook, It's booming. Then we have now 5G. Everybody streaming like YouTube, and like social media, TikTok, like you probably hate like your kids like scrolling like TikTok every day. But you just imagine like that really just happened over 20 years. Like how fast the internet industry has really evolved over the last 20 years and created so much new applications that's really paving the way for the next generations of applications and adoptions of internet. So that just like get like great similarity to what happening today. The AI we have seen over the last few years a very similar growth trajectory, like what happened over the last 20 years on the internet. If you look at the intelligence level of the AI models, it's getting better and better almost every month, while the cost of the output from the AI is dropping dramatically. So starting from the pre-trained models, right, you can see from 2024 to early 2025, the cost of those models really dropping to like 100x, more than 100x. The intelligence level is increasing at like 2 to 3x. Well, then I think starting from like earlier this year, more and more reasoning models coming out. The O1 model, DeepSeek R1 models, showing you that the intelligence level is now leapfrogging to a level that's like 10x better. And the adoption is getting crazy because of the reasoning capabilities, while the cost is dropping, like what happened to the pre-trained model. So we start to see this similar things happen. I think like now going back to the internet era, the AI era is going to follow a very similar pattern where the cost could be probably 100x cheaper, while the intelligence level could be 1000x better. So if that's going to happen, that's going to drive a lot of the, I think, future adoptions of AI. So already we have seen a lot of apps like in the AI, like ChatGPT is probably the fast growing app out there, is getting like 100 million monthly active users within 2 months. We have never seen that in the internet era. We have the enterprise revenues coming from like Anthropic. That is like by like end of 2024, their revenue is only like 1 billion. But just like on August this year, it's already 5 billion. So 5x in 7 months. We have never seen a company growing like that. So the commercialization of AI and the adoption of AI, the user growth is actually outpacing the internet era. So with that, we think like we have to really invest in a way that like you have to position your investment around the current level or the evolution of intelligence. If you think of previously, the most AI is really like chatbot, right? Like they think about like the first generations of ChatGPT, GPT-4 is really understanding human language and then doing like one prompt and give you an answer. Then starting from like this year, you're going to see the AI become like a reasoner. You can solve problems. You can understand context. You can do some like a chain of thoughts. That's getting smarter, and that's unlocked a lot of options. And also with multimodality, like the images, the videos coming out, AI, that's really like creating tons of new applications out there. So we're currently at the stage between AI being a reasoner to AI being an agent. I think a lot of people talking about like may not heard of the agentic AI. Like AI agent is definitely the hottest keyword this year for most companies. So if you talk to enterprise owners, talk to the like technology officers of each company, they all like crazily figuring out how to really onboarding the agentic solution to the company. So what is the agentic AI? It's really autonomously planning and make decisions and take actions with the environment. So you actually can gather data, you can understand your environment, understand your workflow. So you deploy that, you can make autonomous decisions. That is I think like a lot of people question about it, the AI adoption previously on the enterprise level, because, it's the end of the day, just like a chatbot. Then now with those agentic capabilities, people start to believe this has like a real economic impact in a lot of enterprises. So with, I think the current stage, a lot of applications really around AI coding, because coding is, I think, the best way to integrate it with the AI agents, because if you try the latest models, either from the GPT model or the Anthropic Claude models, though the coding capabilities for the latest models is quite amazing. It's achieving a level that's almost like a junior to mid-level software engineer. So with those capabilities in place, you can actually integrate it into a lot of workflow that within your organization. And going from here, we're going to see the intelligence level increase. So you can actually create knowledge. You can actually interact with the physical world. You can bring the action data into the training model or the inference model that can actually bring the robot to AI, right? So that's something I think is going to happen for the next stage. As probably heard like Jensen Huang mention on GTC conference, that robotics is bigger opportunity for the next big thing after AI, because we have seen the same framework that people are putting intelligence on the digital world, now are training the AI in the physical world. And after that, we're going to see potentially AGI is going to happen, artificial general intelligence, and the AI could potentially be an organizer for our society, for our economy, just automate all the workflow and organize all the decision making to the maximum at this effective way. So that's kind of like the roadmap for the AI revolution. And we're just started, I think, in the level 2, between level 2 and level 3. So it makes like a lot of sense. If you look like the workflow for enterprises, like we have this data to showing what percentage of each industry now have paid subscriptions to AI models, platforms, and tools. So actually, it's not really surprised that the technology sector take the far lead compared to other industries. The technology sectors has like it's 72% of companies actually now using AI, followed by like finance, a lot of like I think both banks, insurance, and fintech companies, and then the rest is really lagging. I think manufacturing, retail, healthcare, construction, those mostly happen in the physical world, is lagging. That's lagging for a reason. As I said, the digital world is easier to be automated, to be trained using AI, because the digital world data is so available. There's so many texts and images, the videos available for people to train model, to deploy it, and train large language model. So most of the AI models nowadays is really focusing on the digital world. So I think going forward, then these adoption gonna gradually migrate to the manufacturing side, retail, healthcare, and construction, and our service sector in the end, maybe our home. So that give you an example. I think like Anthropic, you may not heard of. Anthropic is founded by the former OpenAI like executive. They have been really focused on the enterprise market. because they are pursuing more safe, ethical, controlled AI. And I think one of the key reasons is their code generation capabilities were very strong. So the user experience from software engineer enterprises to really get work done in more like stable way, that's a game changer. So that's why their API is very popular among like each enterprise like agentic AI adoption. So as I said, like their revenue jumped from like 1 billion last year to now 5 billion August. So their market share of enterprise solutions really increasing, taking the market shares from OpenAI. So we have seen like company like that is really a critical company to think about like the next stage of investing AI. And there's a lot of nuances happening, right? So if you think about like the AI opportunity, so currently there's 3 layer or 4 layer if you including the model companies. There's hardware. I think a lot of people already focused a lot of their investment on the hardwares. Still is like the most obvious names like the semis and data center companies. Like then you have the AI infrastructure providing the cloud, providing the data preparation, the data monitoring, cybersecurity. So that's the infrastructure for the model to be trained, to be deployed, to be inferenced. Then you have the model company themselves, like Anthropic, XAI, that is being the core intelligence of the whole ecosystem. Then upon that, then you have all kinds of applications, either to the enterprises. Then you have those like middle ground, like context layer provider, those just enterprise like service provider that's really helping enterprises using AI. Or you have consumer facing applications that's using the AI to transform their business model either in the healthcare sector, in the education sector. So this ecosystem, we realize, is so dynamic. Just like I think everybody's saying, oh, model is really commoditized, like it's commoditized. It's like commodities, like there's no sense to invest in model. But we do see OpenAI, Anthropic, XAI, they've been growing, they've been expanding, they've been like the kind of like the core for all those opportunities. And people abandoned some of the hardware, I think, previously because they think like over investing, like then we don't need more chips. So focus on applications, then people realize, I think this year applications it's really lagging. So we still need a lot of like chips, still need a lot of infrastructure. So all the focus is back to infrastructure. And within each layer, there's a lot of dynamic as well. If you think about just among the applications, the SaaS companies, there will be SaaS companies that's ready for AI. And there will be definitely like losers. So I think like just in the next 2 to 3 years, every company gonna claim they're AI company. So that's a challenging thing because like you have to understand like how the AI model is gonna be integrated into each company's business model. So that's challenging. As that's like a challenge. Like I think every investors, including professional portfolio managers, is facing. So we believe probably the best way or the only way to getting the edge in the AI investing is through partners and knowledge sharing with the AI native researchers. So we launched a fund called AGIX. It's subsidized by the AI native researchers and venture capitalists that investing like Anthropic, XAI, Perplexity at an early stage. So those people, they talk to the model companies, they talk to the AI researchers among each firm. So they understand what's the status for the AI deployment, what's their model, what kind of like latest dynamic within the firm. So those knowledge is so valuable. So as when we talk to them, so why not just let's partner with those knowledge? Maybe you can do it quarterly. We can put it into an index ETF. So that's why we launched AGIX, kind of like a first ETFs partnering with like AI native researchers last year. And then the following discussions like, what if we miss those most critical companies, the foundational model companies like Anthropic, like XAI? So the answer is like, why not just put them all together to complete the ecosystem? So together with them, we've been able to talk to those companies directly. So we talked to Anthropic and XAI. So we be able to really participate in their run, like fundraising. We sit on the cap table as a shareholder. So AGX on behalf of KraneShares Trust sit on cap table of both Anthropic and XAI. We participated the Series E round of Anthropic on March this year and the tender offer round of XAI on July. So we're happy to offer investors a complete solution to really navigate this dynamic of the AI development. So that's kind of like a very innovative way, one of the first kind of like ETF to have private exposure within the ETF. So that's kind of like we have more than, I think, like 85% into the public. Then you have less than 15% into the private to really capture the full opportunities that are within the AI ecosystem. And as I said, maybe going to the few years later, we're going to see the AI is going to deploy to our physical world. So this is so early, but like everybody is like now getting attention because, as I said, like big tech companies, Tesla, Nvidia, Amazon, they've all been betting on this category. So like Elon, definitely the biggest fan of Humanoid, been talking about like their Optimus plan, like on every earning call. So that's like kind of like they're gonna like Elon think a Humanoid is gonna transform the business. It's not gonna be like smart car business. It's gonna be a humanoid business going forward for Tesla. And Jensen, as I said, is really developing models and foundations for the model trainers and to create this generalized robotic models that can really bring the action data to the model so that people can train that and people can really navigate the humanoid with like human demonstration, then synthetic data in the omniverse. So you can train the physical model like they train it in a digital model. So like the Google Gemini, they're doing like a vision language action model with their very advanced multimodality capabilities. So they can actually bring the vision, the images to the model so they can really understand what's happening. So there's all kinds of efforts around humanoid because there's a real demand, right? So the factories want it. As I said, like the last 10 years, there's a lot of automations already happening, but still is very labor intensive for a lot of factories. To finish that like last mile of automation, humanoid become a natural solution because those working environment is designed for human, opening doors to navigating stairs to kind of like you have to work with human actually at the first stage. So humanoid in a human shape make a lot of sense to that way. Amazon is now, I think, like testing using humanoid as kind of like the delivery guys. They already have like a lot of robotics on their logistic and like sorting on the packages and the warehouses, but like you still have to facing very complicated scenario when delivering the box. For example, like the store, like there's there's dog there. There's like some stairs they have to navigate. So we have seen like some like autonomous food delivery, but like that's something I think like going to be more scalable if we have like humanoid that can really take over a lot of delivery job. So Morgan Stanley actually they projected the humanoid robotic market can be as large as $5 trillion by 2050. And we could see like 1 billion unit of humanoid that's like mass produced by then. And I think Elon has another projection is like they're going to have millions of units started to be produced starting from next year. I don't know. Elon's timeline is always like very aggressive, but like he always got the direction right. So give him the credit that the EVs kind of like he see this as early stage, and even though everybody's questioning after years, he finally delivered. So we see like humanoid is probably a similar development like what we're seeing in a smartphone, in the smart cars. Now it's the smart robotics. So at this stage, what we can do to invest in humanoid? We think there's a 3 component. One is the integrators. Maybe everybody already know some of the companies, but integrators is like companies putting the things together. So like Tesla is one of them, like UV Tech, like Rainbow Technology. So those companies are integrators. And then there's intelligence. The companies are providing the foundations for model training, all those like newer technologies and the motion, like to really from the models to motion control, there's a connection, there's chips available. So that's the brain. But most importantly, I think is the body, because the body need to be really ready. The supply chain need to be ready to make it scalable. So the humanoid can be cheap enough. So everybody can use it, and everybody going to use it like a phone, like a car. Then people going to keep upgrading with new models. And that's the only way to make it very scalable and sustainable. So far, there's a whole ecosystem out there. I think nobody really understand or not like own a lot of those positions, because a lot of those companies are really listed on the international market or emerging market even. So there's actuation system that's really allow each component to move, to control. There's mechanical system that's really functioning with all of those very sophisticated move. The hand is very expensive, probably the most expensive part. So there's a lot of companies just focus on the hand. Then there's like a sensing and perception companies providing sensors, providing all those like touching technologies, and there's critical materials. So that's really, I think like an ecosystem out there. We actually did a trip to China recently to see, I think as people know, they have been doing this, the first world humanoid robotic game. They also have like the world humanoid conference there. So it's a lot of things happening. Like people can see like the racing competition, like boxing, or just like sorting competition is like all over the place. So the humanoid is at another level. Then this, as I said, it is very expensive at this stage. The supply chain is not there. It's not ready. You have to really keep putting a lot of capital to work to make it ready, to make it scalable, so that those billion unit of humanoid can be really produced in a very cost efficient way. So it's really consumer friendly or manufacturing friendly. So we look at the cost of like the humanoid manufacturing. The body takes the most apart. Those like actuators, harmonic reducers, bearings, encoders, those are key components. As a hand is not a very key component. So we identified a suite of companies that's really the supply chains for the startups, for Figure, Aptonic, Optimus, Sanctuary, Unitree in China, like UBTech in China. There's so many companies now are providing those components. So they have like advantage in each of their own category. So we think this ecosystem approach is kind of like the picks and shovels, as this is already, and a lot of key companies are still in private. So that's why a lot of companies, they're going to need to invest in the supply chain to make their humanoid mass producing. So we think at this stage, it's so early, so investor can position in a very diversified way to capture the ecosystem. And as we see the ecosystem is really defined as the three buckets. There's some like integrators, there's some like brain companies, and there's a lot of body companies now available to this ecosystem as we find a methodology to identify the relevance and their supply chain strategic partnership with the humanoid companies. And you can see a lot of names here, like is really international. I think listing both Hong Kong, like South Korea, Japan, Germany, but also there's a decent amount of companies like in the US as well. I think in US is still like leading in a lot of like the brain, the intelligence part, and also like they have a lot of integrators that's coming. And China and other emerging markets like Japan and Germany, they're good at manufacturing. They have a good like ecosystem out there to providing the supply chain solutions. Their motion control is like far beyond the imagination now. So we actually bring one of the humanoid to ring the bell. So for our ETF COID. So as I mentioned, we have now two ETF here actually like offering you like both solutions. On the AI side, there's AGIX. So it's a public and private hybrid ETF capturing the ecosystem for, I think, from Gen AI to AGI. But COI is really focused on the physical AI where the humanoid and embodied intelligence is kind of like a next generation of the investors' focus. Those are really like structural growth opportunity, I think. They're going to take like a decade to really play out. And we believe taking a more like ecosystem and basket approach could be a better way to invest in the long run compared to betting on like single companies or a single product. So that's kind of like the kind of like presentation today. So AGX currently about like 97 million. We launched on July last year, and is listed as listed ETF on Nasdaq. So anybody can see it on their on the website of KraneShares.com/AGIX. So for the performance is it's been very strong, driven both by the public and the private. For the COID is another ETF we launched on June this year. It's about like 67 million, I think now. So it's about like 50 name equally weighted. And yeah, since inception, we have been doing very impressive return as well. So I want to show like a quick clip. Actually, like we did a trip to China recently, and we have been really filming some like great footage. So just want to share with everybody. So you can see like this company is already started like a mass production. There's some like a facial recognition and facial like expression. Their motion control is really strong. Like if you kick it, if you like move it, it's very stable. It's like they're running marathon. And this is another interesting like company. You can actually using the app to do like autonomous, like just like fully autonomous like retail experience. Your app order, then humanoid gonna grab the things or make coffee. There's another humanoid actually decided to making coffee. Then is gonna be delivered to you with online payment. So that's something like quite unique. And we visit like the hand company. There's like a detectors hand. They're like doing the sensing technology that you can feel the pressure, proximity, and the kind of like the it's a touching technology. So you think like if humanoid gonna do our sophisticated tasks going forward, like grabbing the cell phone or like a water or something like that's really fragile. You don't want like if you want a humanoid to do laundry or clean the dishes, you don't want like it to really break the dishes. So you need those technology. We found a lot of those supply chain and component company in China. It's really, really interesting. They've been doing great. I mean, like growing business. So it's an interesting ecosystem out there. So that's why like I think like if you think about like ChatGPT is kind of like the moment where investor realize like AI is here. We can see like some humanoid actually like probably gonna walking by you and running on Times Square. Like someday, then you're gonna see, oh, this is happening. So that's kind of like my presentation. We're gonna see if there's any questions from investors. Happy to answer any questions you have.
Somebody asking about first of all, saying great presentation. Is it possible to get the slides?
Yeah, I can. If you can send me an email at info@KraneShares.com, we can definitely send you the presentations. Yeah, and there's also like a lot of articles and for the fund presentation fund deck fact sheets is available also on the KraneShares.com /AJAX or KraneShares.com/KOID. So for more information, you can check there.
So the big talking point now in the media is that the bottleneck for all the AI is the actual energy, right? Mm-hmm. That's the sheer amount of energy that's needed for these data centers is enormous. What's the bottleneck for humanoids? Like, is there an equivalence?
I think we don't have that same problem as the AI data center right now, because if you think about like the AI models, it's all in cloud, right? So it's really you have to solve the problem that the bigger the model is, the bigger the data center is, and you need like tons of energy. And for the humanoid models, so far as I know, most of the model is running on the edge. So those edge computing is very different in terms of energy consumption. And as you can see, like those humanoids really run on battery. So I think like we have an oversupply of batteries so far. Who knows if there's a mass production of humanoid, maybe there's a battery shortage. But like so far the energy part is easy to fix. The hurdle is really on the brain. You can see the motion control, the hardware, like the action that the humanoid can do, can move, can run, can see, can flip, can do dances. It's crazy. Like, so the hardware is ready. So you just need AI. You need physical AI to be good enough to operate the humanoid. So I think that's still lagging, but like that's starting. Just as I said, the vision language action model or the generalized robotic model is going to change this. It's good. Then you're going to unlock the unlimitedness of the possibility for humanoid because the hardware is so ready for this disruption.
What do you think is more upside potential? I mean, is that even a fair question to ask between the AI side and the humanoid side? I mean, the one needs the other, obviously.
Yeah. So I think a lot of people already heavily positioned to AI names to their standard. But like not a lot of companies from the humanoid ecosystem are really exposed. So that's kind of like I think, opportunity for investors to really think about if you already own AI, what's like complement, right? So most of the AI currently is really US focused. It's like big tech companies. Then there's a lot of, I think, innovative companies also in US that's not in NASDAQ and in the private side. But if you think about a humanoid, as I said, it's very international. It's very hardware driven at this stage because the hardware is so good and the model is not ready. And so that makes a whole different set of investment opportunity in terms of sectors, in terms of geographic, in terms of correlation. So sometimes like you can see like AI is up, humanoid is down. Sometimes you can see, wow, actually humanoid outperformed NASDAQ this year. So that's going to be very, very different set of opportunities. And I think, and in terms of asset allocation perspective, like the AI is probably our core because those like $1 trillion companies are a lot of them, right? So those are kind of like the driver for the economy, enterprises, that's going to be mainstream. But humanoid is so under-owned and is not really discovered by a lot of investors yet. So at the early stage, this is kind of like, it's like quantum computing in a way, because I think today, just like HSBC said they're going to use IBM's quantum computing. Like, so people don't realize, oh, it's actually come to our real life. So maybe like Amazon's going to ask, we're going to replace all the human delivery guys with humanoid. So then people are going to ask, oh, this is such a big opportunity. So when that comes, I think like those humanoid companies going to definitely get a lot of attention in a way like AI did today.
It's not just the US that's in the race, it's also China. So there's a question here, who do you think is going to win the physical AI race, US or China? You just came back from Asia.
I just came back from Asia. I was traveling. So I was thinking, you are a good question, because I don't think there's a way to each one going to win themselves. So China, they have very good hardware capability, manufacturing capability. They have a good supply chain ecosystem. From each component is very sophisticated. There's tons of supply chain you need to figure out, from material to the component to the actuation system together. So that's an advantage so far for China. They have a lot of companies that's together in the same province that they can just like being very scalable. So if there's humanoid companies like Unitree or anything like Agibot, there's like tons of those companies now ready to, they're pretty profitable because they've been able to source the components in a very cost-effective way. So that making them kind of like advantage in the body. But if you look at intelligence, so far, without a doubt, US is leading in intelligence, in the model developing, and a lot of talents around creating the best models in the world. China's catching up, but like I think the US is still leading the space, especially with its ecosystem in the Silicon Valley, with leading by like NVIDIA's platform and all the AI researchers is here. That give US a key advantage. And also on the commercialization part, I think US is also leading, because think about labor cost. Here is very expensive, right? So hiring someone at a factory, warehouses, service sector is so expensive. There's labor shortage, aging population here. In China, they're starting to see that in manufacturing, but the labor cost is still very low. So the early time commercialization makes a lot of sense here. If you think about nanny price, in China, so cheap for the nanny, but here is crazy. So the price gap is going to be different. So like I would think like when those humanoid company, they starting mass production of humanoid, figure out the supply chain, then that's a problem for commercialization. Who's going to win the commercialization? That's probably very far. Like when we're going to see AI, we're still wondering like what's the commercialization for AI at this stage. Now, the enterprise are coming out for a solution, but for humanoid, I think that's a long way to go.
Charles, you hit on a little bit, sort of the it's not core, right? Although you can argue S&P, NASDAQ is now core AI, because that's what's driving the returns. But how should one think about sort of position sizing for these two mega trends? Because if these are mega trends, then they probably shouldn't be small, but then again, they're also not as diversified.
Yeah, I think like for the AI is kind of like so far as the driver for the equity market for Nasdaq. If you think about like over this year, S&P was up like I don't know like low double digit, and AI is probably like 70% of that contribution. Without AI, you're probably going to be flat on S&P 500. So we have seen that before with same as PC, internet, cloud, SaaS. So on the next 5 to 10 years, you're going to see AI going to play a similar role to those AI winners. They're going to dominate the performance. You think about like Dell in the early times, going to like 1,000 times, and Apple, like those opportunities kind of happening in AI, going to transform the weight. I think it can even be more concentrated to AI names within the even Nasdaq 100 or S&P 500. So AI concentration can just lead people to overweight AI naturally. But you have to play in a way that you have to identify winner out of losers, because losers is going to drag the performance. So that's one thing. But humanoid, I think, is really underowned. It's like nobody has much of the position, especially talking about international emerging market. Nobody's like US actually has been doing so well over the last 10 years. Why bother? Why should I diversify? Especially on something like humanoid. There's a US company, but like, yeah, they're China's leading. So I don't have access. So that's why like I cannot trade for like those single stock. I don't think a lot of people can open an account in Hong Kong and start buying these companies. So that's why we feel like we have to create a solution to really bring all the companies relevant to the investors here, so people can get access.
Folks, for those that are here for the C credit, I will email you after this webinar, get your information for the CFP board. Appreciate those that are here. For those that want to learn more about the humanoid side, right, aside from this webinar, and I'll have this as a replay, any other good sources either on the KraneShares side or maybe even outside the KraneShares side that are worth paying attention to?
Yeah, actually, we have seen a lot of research on humanoid actually across the major banks and brokers and research providers. Morgan Stanley is definitely the biggest one. I don't know if anyone has access to their research, but like they have done a lot of good research on the humanoid side. Their analyst, Adam Jonas, I was talking with him. He's definitely a genius who has the vision for Tesla, I think like 12 years ago or something. It's quite like focused on the like emerging technologies. And humanoid is their latest focus. Actually, he now call him like humanoid analyst. So that's something I realized that this is happening. Same as for other firm, I think Goldman, UBS, they all have like latest research on humanoid. At KraneShares, we do publish our research on humanoid as well. As I said, if you check KraneShares.com/KOID, you can find a lot of research that is really what we talked today. What is driving this industry? Which company going to benefit? So there's a lot of article about that on our website, so investor can check that out.
That's a good place to wrap up this webinar. Appreciate everybody that joined here. Hopefully you found it very interesting, and take a look at the funds. As you can tell, the right space, the right theme, the right issuer. Thank you, Derek. Appreciate it.
Thank you, Michael, and thank you, everyone.
Cheers, everybody.
Cheers.